What's going on, guys? This is Foresight Capital, and today we're going to take a look at Palantir's price action for the day and talk about a contract that they signed at the end of December that they just made publicly available today. And we'll take a look at an article that I found very interesting on Palantir's involvement with the US government and how that really needs to evolve over time in order for Palantir to continue growing at the same levels that they're currently growing at to become profitable in the coming years. All that I ask is that if this video brings you value, give it a thumbs up and consider subscribing if you're new here because it really helps this channel reach more people. Also, if you're in the market for a new brokerage, consider using the link in the description to sign up for Webull. If you deposit $100, you'll receive 4 free stocks valued at up to $1,600, and that is good through the middle of January. Again, it's a great opportunity to collect 4 free stocks simply for depositing $100 and engaging with the platform. So today, Palantir closed at $23.37 per share, which was down just under 1% on the day, and then in aftermarket hours gave up just a few more cents to $23.30 per share. So overall, it was a relatively flat day considering Palantir's volatility, but it was very surprising because, as I mentioned, Palantir announced today that they signed a contract, which we'll get to in just a moment. Now, there were some rumors of this contract over the past couple of trading days, so it's a potential that there just wasn't a very large reaction because it was already known by some of the larger investors. But as I mentioned, it was also just made public today, so most people should have just been finding out. Now, what was interesting is that we saw a spike in pre-market, as is often the case with Palantir, followed by a sell-off as soon as the market opened, before a retracement and then ultimately selling off again. So we can see that we pushed towards the $24.60 per share resistance level, which acted previously as support for Palantir. And then when the market opened, we fell all the way down to $22.60 per share, which is the support level that I've been discussing for quite some time. In fact, a couple of videos ago, I made a video stating that I sold all of my Palantir shares at $26.51 per share, which was basically break even. I made just a couple $100 on the trade, looking to re-enter closer to the $22.60 level because I firmly felt we would fall there. We used roughly $22.60 today. In fact, it would be a little more accurate to say $22.50 as support before seeing another spike and run towards the $24.60 per share resistance level in the afternoon, and then fading away in afternoon hours and failing to break above $24.60. So very interesting price action. Again, we'll talk a little bit about the contract here. So it was signed with Sompo Japan, which is a very large insurer in Japan. In fact, I believe they have something like 19% of the overall market share for insurance in Japan. So they're second to only one company and just a very large player in the industry. They signed a $22.5 million one-year partnership with Palantir to provide streamlining services for supply chains across the public and private healthcare sectors and to help them increase security in the public and private healthcare sectors. It goes on to mention that will accelerate their digital transformation of the Japanese commercial and governmental institutions and help connect infrastructure across key industries. So this isn't a direct government contract, but it is a very large player in the insurance industry, which integrates very well with the Japanese government. And we can see here that Palantir will ultimately be doing work for both the insurance agency but also healthcare providers, and in an indirect way the Japanese government. So it's not quite a government contract, but they'll still be doing some services for the Japanese government. It'll be very interesting to see how investors continue to react to this particular contract. It seems like the reaction was almost zero today if we look at the price action. And again, it may have already been priced in, or it may not just be a significant portion of the revenue. We know that next year analysts are projecting somewhere around $1.4 billion in revenue, and that was before a couple of the contracts that were recently renewed or signed by Palantir. So the revenue projections may be upped to the $1.5 or $1.6 billion range, meaning that the $22 million contract isn't a significant portion, but it is over 1% of Palantir's projected next year revenue. And we saw a decline in the stock price today. not very common, so it'll be interesting to see how that trades over the next couple of trading days, specifically on Tuesday. And I also wanted to take a look at a contract or at an article that I found on Palantir. It's on Investor Place, and I'll try to link it down in the description below. But it talks a bit about Tesla and their overall dependency on the US government as providing carbon credits that ultimately make Tesla a profitable company, and that if they were simply selling cars, they wouldn't necessarily be a profitable company, and the dynamic of the company would look very different. Now, the article, in a way, suggests that Palantir's involvement with the government gives them too much dependence on government-related sales for their overall revenue, and it notates that 54.5% of total revenue comes from governments, which was up from about 47% a year ago, and that if the US government or other governments fail to continue being great clients to Palantir, they'll predictably have a very hard time growing future revenue. Now, Palantir is in no way depending on the government for subsidies in order to be a profitable company. They do depend on their contracts, but if we take a look at their Q3 earnings, we can see that they mentioned they had a loss of $847 million, of which $847 million was stock-based compensation. And if you got rid of that, their total loss from operations in Q3 of 2020 was just about $73 million. So overall, they are very close to being a profitable company, as they should be, given that they've been around for 17 years. It's just important to note that this article sort of alluded to the fact that Tesla is depending on the government to be profitable, and that they're not saying that that's the same case with Palantir. But it is important to note, and it goes on to mention, although not directly, that the US government is able to borrow virtually unlimited amounts of money at virtually no cost, because the treasury rates are so low, and by the time inflation is factored in, the real rate could be negative in most cases. So when the government can borrow virtually unlimited amounts of money, they're able to sign these more lucrative contracts. When interest rates do eventually go up, it will be interesting to see if the government continues these contracts with these companies, or if they're simply entering these contracts because why not borrow virtually unlimited amounts of money, since the cost of borrowing is so low to basically zero. So that's just something to kind of keep an eye on, is that all stocks are in a way affected by interest rates, because other companies need to borrow money as well, and they borrow money at higher interest rates, or when they borrow money at higher interest rates, the cost of borrowing that money is higher, so they either don't borrow as much to fund expansion, or the cost of the funding the expansion is higher. So generally that leads to lower overall returns for companies. So Palantir has that risk as well, but they also have the risk that a large portion of their overall revenue is derived from governments that are depending on borrowing money at these lower rates. So it'll be very interesting to see if and when rates start rising, if some of the governments back off of signing these larger contracts and they deem them to be not as necessary as they currently are. Now, it does point out that the United States is likely to continue to try to keep its AI dominance across the globe and to stay ahead of China in that industry. So it's not likely that they're going to just push Palantir to the side, though if another company did pop up that was able to provide the same solutions at a lower cost, it's something they may consider, though it doesn't seem that any companies are really infringing on that territory for Palantir now. So overall, just something to kind of watch. It's something that the article doesn't mention directly, but is interesting to think about, that potentially governments may need to back off of some of these contracts that they're signing. And they're by no means large contracts in comparison to something like the US defense bill, which is hundreds of billions of dollars. We're talking tens of millions of dollar contracts, which could just as easily be wasted in some other areas within the government. But just important to keep your mind on that potentially these contracts could come to an end or become less lucrative for the Palantir, and it's going to be important to see them have alternate revenue streams in the future that just aren't dependent on government's ability to basically borrow unlimited amounts of money at any time. So let me know your thoughts down in the comments below.